Hi, everyone, and welcome to a very special edition of our Coffee with Innovate Finance podcast series. I am delighted to welcome with me today Chris Locke, EMEIA Partner of UK Financial Services Transactions Diligence and IPO Leader. Chris, welcome.
Hi, Janine. Lovely to be here with you this afternoon.
So I am really excited to speak with you today and pick your brains about the IPO environment, what more we need to do here in the UK to even further strengthen and cement our global leadership position. But to kick off, I'd love to hear a little bit more about yourself, your responsibilities at EY.
Yeah, sure. So happy to give you a little sort of run through on that side of things. So I started out life over in the UK, but then moved to Guernsey when I was fairly young and sort of grew up there for many of my formative years. And started work there actually. So I started life originally as an auditor, but that was with a great exposure to the financial services in the offshore industry, which has a sort of a microcosm of financial services in the UK. So it was great because it gave me exposure to banks one week, insurers the next week, asset managers, fund and admin services businesses. So I got to see sort of all the aspects of financial services in a small area, which was fantastic and gave me a great foundation in that sort of financial services space. And then when I moved back to London, that's where I continued to work going forwards. And having spent 2 years in London, I decided the life in London was for me. So I stayed over here and kept going down that side of things and really got into the transaction space at that time. And it was probably a few years after that I got to spend 8 months working with Clive Cowdery, who was forming his second vehicle, Resolution 2. And I got the joys of sitting there with him and his team, taking that literally through from a scrap of paper on the side through to a listed vehicle, to a premium listed vehicle over that sort of 8-month period. So I got to see all of the ins and outs of it, realizing challenges in going through it and the complexities of it. And I must admit, that's probably where I got the bug for it as well, in terms of really understanding it and seeing the satisfaction of the successful process there and seeing what can be achieved if you know what you're doing and how you can work with the market and how you can be really effective in raising money. So having done that, I went back into the EY side of things and then really focused my time working on IPOs ever since then. So a little bit of a jack of all trades across financial services, plenty of focus on IPOs, and then a reasonable amount of focus on sort of wider disposal process, refinancing, sell and separate areas as well.
That's excellent, Chris. And it sounds like you've really had the benefit of viewing this ecosystem from a number of different vantage points. Yeah. From your own experience, how would you say the market has changed since you joined the industry?
Certainly, it's probably one of iteration and evolution rather than revolution, I would say, over the last sort of, I guess, 12 years since I've been working on it. We've seen sort of limited step changes within the rules, regulations, and approaches. As I came in, certainly with the sort of history of the FCA, I think John Tyner was in the lead at that stage. There was more of a focus on light regulatory touch. As we went into the financial crisis and challenges there on bank bailouts, etc., we suddenly had more of a swing to more focused regulation and more challenge in the market space. But then we've also had some sort of realignment. We've had some easing of several aspects of the listing rules. We've helped it, tried to make it easier for inbound businesses to come in. We've sort of changed the coverage model. We've looked at being able to get unconnected analyst coverage in place and sort of move forward on a few little bits and bobs like that. But I guess, fundamentally over the last 18 months is probably where we've seen the biggest step change since I've been looking at it, and certainly as part of the Hill review and having the joy of seeing it from that side as well, and thinking about it from industry perspective and from the government regulatory perspective. The steps and the advice that we've put in and the recommendations both out of the Hill review and the Khalifa review has really seen a step change in development, I think, in industry and in the government. And I think actually what's been really good to see and exciting to see has been the engagement of government in this, and the pace with which both the Treasury and the FCA have picked up on those regulations and really engaged with them. So, really, really great to see that, and looking forward to see what happens in the next sort of 12 to 18 months as a result.
Yeah. Let's dive a bit deeper into the Hill review and the Khalifa review, because as you've just mentioned, I think it's fair to say that we've seen incredibly strong progress against many of the recommendations, for both of those reviews, and great progress done by UK government, by the regulators, and by industry as well. This has taken a huge, this has made a huge opportunity for us to really cement London's position as a global leader in terms of starting and scaling and growing a fintech business. Is there more that can be done? And particularly in light of the role of government and regulators, what more do you think can be done in terms of offering help?
Yeah, I certainly think it's great on those steps to date. And I think if I go back to my discussion on the market as well, the other thing we've seen that's progressed is the internationalization of the market even further, and the fact that we're seeing more exchanges, more regulatory environments competing for those businesses to come and do the listings locally. So that has certainly changed more so in the last few years. And I think, the recognition of that within London is great. And we're starting to see some steps towards that with the current recommendations that have gone through. I think, if we just look at the open points on the Hill review and some of the further steps still to be taken, I think, a constant review on where are we on that competitive market space and whether or not we need to be better aligned in some areas, or we need to make a difference to sort of stand out against some of the other markets, is to continue to do that is for the next step change, because I think then we get behind again and then we're trying to catch up again. So that sort of regular annual review, I think, is really important. There's a few areas in terms of provision of forward guidance that are still needing to be dealt with. Lots of things slightly more broader around how we help the likes of insurance companies get access at an earlier stage. I think there's, the commentary around the visa system, the speed with which, fast growth companies can get the certainty that they can find the staff they need and that they can grow at the pace they need within the UK environment, so that they've got the foundations in place to get them to the IPO in the first stage. And I think certainly thinking about how we attract some of that earlier stage investment is going to be important, because that really lays the stage for how the businesses, grow and advance in the longer term. So more to be done on that side of things. And then I think it's just continuing to really celebrate the successes of the businesses out there and have real alignment between government celebrating it, press celebrating it, industry celebrating it, so that we get that feel-good factor out of it. I think, one of the big challenges we've sort of heard when I went through the Hill review is that, you've got founders in the US who wake up saying, I want to be a listed company, I want to be the CEO of a listed company. Whereas in the UK, you just don't hear that coming across. There's not that aspiration there. And I think generating that excitement and demand will be a great way of pulling through more people and helping us really sort of further develop the sort of fintech market space over here.
I agree. And it's so much about championing the successes that we've seen in the UK industry. We know that in 2021, for example, we had 11.6 billion US dollars invested into the UK fintech ecosystem. And that's something we really should be shouting about and celebrating about as well. Now, Chris, we obviously have gone through a very difficult 2 or 3 years with the COVID-19 pandemic, and we know that the pandemic has underlined how important technology is to all areas of our lives, particularly when it comes to financial services. Do you have any thoughts about how the pandemic has specifically affected the market?
Yeah, I mean, there's a sort of real sort of tale of two sides, I think, in the marketplace in terms of the tech industry. Certainly, we've seen for many players out there that they've had a fantastic opportunity to really accelerate their growth. They've really had an ability to go into the market and to deliver the changing demands for customers, and they've really been able to leverage off of it. Unfortunately, on the other side, we've also seen tech companies that have struggled through the COVID cycle, where they haven't quite connected appropriately, or where analysts have had the expectation that they should be growing hugely strongly as a result, and they haven't been able to really capitalize on that. And we've seen some, real mixed press coverage, I think, for a number of the tech companies in the UK in particular as a consequence. And certainly, just outside the sheer volatility in the marketplace, there certainly seems to have been a bit of a shift away from investing into some of the growth stocks and moving more back into the yield stocks, which I think is challenging for growth companies. And certainly, I think it means that when businesses think about their equity story, a large component of it going forwards will have to be being able to talk about and explain the sort of through the cycle performance of the business, and being able to demonstrate how you can be somewhat insulated against some of those challenges in the market. Because most recent results over the last month or so have shown the world is still exposed to some significant volatility and challenges, and we just don't know where it's going to come from. So that ability and some of the robustness in the business and the business models probably means companies are going to have to be a little bit more mature before they come to market so that they can demonstrate an ability to withstand that.
Let's dive into the IPO process, because we have a lot of listeners today are entrepreneurs or fintech CEOs.
Yeah.
What are your words of wisdom? So what are the key things that founders need to think about when considering an IPO?
I think there's a few things on this. I would say, first and foremost, you've got to be really, really clear on why you want to do the IPO. This is a tough old journey. There's no two bones about it. It's difficult. It's pretty complicated to go through, and it will burn an awful lot of time and effort. So you need to be really, really clear about the objectives of that IPO. What do you want to get out of it, and what does good look like? You need to be able to test against that as you go through that process to make sure that does this still remain the right answer for you as you rumble through it, because there's no point going down 18 months of pain and heartache if it doesn't come out at the end that this isn't your optimal choice. And I think really tied to that as well, you need to look at your options. So whether or not it is an IPO, whether or not it's a debt raise, whether or not it's a partial sale to private equity, there are a lot of different routes down there. And dare I say, the SPAC word as well is lurking around. We still know that, whilst the huge sort of highlight of the US SPAC bubble is probably past somewhat, there's still something like 710 SPACs out there with $166 billion of dry powder. So we can expect more activity on that space going forward. So knowing all of those options and being clear on why you want to take the choice you want to take will sort of help you sort of line up the path and test that you're actually achieving what you want to do. And that really also comes to the pros and cons for yourself as the founder or as a CEO. There are some great upsides to the equity markets in terms of, access to equity in the first place, the ability to have a liquidity event. You get the currency of your paper, you be able to get the sort of higher coverage, you get the confidence in your industry and your business as well. The downside of that is there's the significant costs of going through the process, there's the investment horizon, there's the challenges of dealing with investors, there's dealing with that sort of analyst coverage and the guidance side of things, and potential volatility in your stock as you go through it, and the changing focus for the business. So lots of things to weigh up on that side. So if you're clear on why you want to do it, you're clear it's the best option, and that the options are, the upside is going to outweigh the downside, then you can give yourself a really clear strategy as to how you're going to go through
it. Clarity is the underlying feedback then as well. That's great, Chris. Now, we know EY and yourself are great partners of us at Innovate Finance here, particularly around our capital investment priority program, but also on the theme of diversity and inclusion. And I wanted to talk a little bit about female CEOs and underrepresented founders in general. How can we provide them greater support in terms of having a successful IPO, and potentially what more can be done to support underrepresented founders across the ecosystem?
Yeah. It's a difficult one, isn't it? It's as always, and I'd love to be able to give some simple answers on this side of things, because it's so multifaceted. I mean, I would start by saying, ultimately a successful IPO has to come down to the strength and clarity of the equity story. So no matter what else happens, everyone has to get that absolutely correct and precise. And if you don't have that foundation, anything else doesn't really matter anyway. So making sure people are focused and getting to the right pieces and the right areas of development is important. I think, as we have grown over the last 4 or 5 years, we've become more aware of the challenges for the sort of diversity and how we're helping to build it. We're seeing a bit of traction in the board space. We're starting to see more diversity there. And I think, from that, it's starting to provide a bit more of a springboard for people to be able to get more of that advice and input. So, the timing of when you might get in your non-executive director and your board composition, I think for these businesses, you should certainly be thinking about doing it earlier rather than later, because there is a huge wealth of advice and input that they can provide you, and not just at the point of the IPO when you might more traditionally take these people on, but earlier on in the process and earlier in the side of things. I think also, really leveraging your advisors, people like myself, on these sides of things. I think it's very easy to be in quite a macho world where you don't want to ask the questions and challenge and have the silly questions. I think, there is no silly question in these situations because, funnily enough, it's probably going to be fairly important. So you shouldn't be worried about raising that. And if you don't want to do it with your bankers or your investors, use your advisors, because that's exactly what we're here to do. And you're always more than happy to spend that extra amount of time trying to educate people and get them sort of engaged on that side of things. And then I think, really, there's a lot of it's the bottom up as well. We still need to bring more women and sort of minorities into the marketplace. We still need more of the education coming through. We need more people taking on these routes at the foundational level and bringing up a pool of people that are able to, take this forward. So that there's still more to be done on that side of the game. And again, I also come back to this point about celebrating success and really highlighting it and showing the attractiveness, showing those success stories and giving people more aspirational role models to work towards.
It's so true. And at all levels of organizations. So from the junior all the way to the very top in terms of the founder, it's something that we try to do as well in our Women in FinTech Power List, but we need to do more as an industry, as an ecosystem, to recognize the great leadership across all areas. Fantastic. Chris, well, are there any other exciting updates that you'd like to share with us, or ones we should look out for?
So I spoke a little bit beforehand around the various sort of feedback we've had from the FCA and the Treasury in terms of the activity they've already done on the Hill review. It's great to see some of those already in train and some of the laws already changing. The last primary markets review had a broader set of consultations in it from the FCA in terms of really the shape of the market, about whether or not we, have an all premium segment business and all standard segment business. Do we change the approach on that? Do we change the role of sponsor? Do we get the exchange to take a lot more of the rule taking, or do we push more to the FCA? So we're expecting in the first half of this year to see some further feedback from them on their thinking and the returns they got on that side. So I'm really looking forward to seeing the sort of thinking on that, and whether or not we will have even more of a true revolution rather than an evolution in the markets in the coming years, which would be great to see.
Well, exciting times. And I know that we're working with your team on some more programs around listings and IPOs as well. But thank you, Chris, so much for joining us today. It's been a real pleasure to talk with you and hear some of your insights into the ecosystem, into the market. So thank you, audience, for joining us, and stay tuned until next time. And please do visit us at www.innovatefinance.com. Thanks again, Chris.
Thanks very much, Janine. Bye for now.